Silver market was murdered. The price didn't decline. It didn't correct. It was executed with a 37% plunge. Billions evaporated. Stop losses obliterated. Retail investors annihilated. Mainstream media calls it a crash, a correction, a freak accident. Every word is a lie. 37% in a single trading session. No headlines, no breaking news, nothing. That's not market volatility. That's an execution. Friday morning, silver was $121 per ounce. 6 hours later, $75. $46 per ounce erased. Just gone. And here's what makes this terrifying. Nothing happened to justify it. No war declaration, no pandemic outbreak, no banking collapse. The news wires were silent. Every major outlet reported nothing. Complete radio silence. We just lived through the most violent single-day massacre in precious metals history. And nobody can explain why, but I can. And once you see what I'm about to show you, you'll understand why this destruction keeps repeating, why it devastated investors in 1980, why it slaughtered traders in 2011, and why it will happen again, 3 times across 5 decades. Same playbook, same weapon, same carnage. This isn't speculation. This is documented historical fact. And you're about to see the pattern with absolute clarity. Welcome to Case File 37. If you're new here, I expose the hidden mechanics of markets while everyone else chases headlines. Subscribe immediately because this level of investigation doesn't exist anywhere else. And if this analysis delivers value, crush that like button. It pushes this truth to more people who desperately need it. Let me walk you through the timeline of the assassination. Friday morning, January 30th, the final trading day of January, the final day of the week. Silver sits comfortably at $121. January had delivered the greatest month in silver's modern history, 65% gains in 30 days. Analysts were projecting $200, even $300. The sentiment was euphoric. Social media exploded with celebrations. Everyone believed they'd timed it perfectly. Everyone thought they were getting rich. Then 9:30 a.m. strikes. New York markets open. Within seconds, a tidal wave of sell orders floods every exchange. These weren't retail investors cashing out profits. This was institutional scale destruction. Massive blocks. Millions of ounces dumped simultaneously. The kind of synchronized selling that cannot happen organically. Silver crashes from 121 to 115, then 110. Then it shatters the $100 psychological barrier. The support level every analyst swore was unbreakable. Gone. Vaporized in minutes. But the bloodbath doesn't stop. $95, $90, $85, $80. Stop losses trigger like landmines across every platform. Margin calls detonate in trading accounts nationwide. Positions liquidate automatically. Traders don't even get to choose. The system is selling for them. By market close, silver rests at $75. Hundreds of billions in market value erased from existence. I witnessed this massacre in real time. I watched fortunes disintegrate. I saw years of accumulated gains transform into dust in 6 hours. And tonight, everyone's asking the same desperate question. What the hell happened? What fundamentally changed between Friday morning and Friday afternoon? The official answer? Nothing. Just a healthy correction, they tell you. Markets got overheated. Normal pullback. That's the cover story. Here's what actually happened. Before I show you what really happened, you need to understand what we're dealing with here. This is Case File 37. And over the next 15 minutes, our investigation will expose the 3 things the assassins desperately don't want you to discover. First, the weapon. I'll identify the exact tool they used, the digital guillotine, and show you the specific high-tech mechanism that decapitated the price in one clean execution. Second, the motive. We'll uncover why this hit was ordered, and I'll prove to you this wasn't about making money. This was about sending a brutal warning to anyone who dares challenge their power. Third, the suspects. I'm going to name names. The 2 primary institutions who had the means, the motive, and the opportunity to orchestrate this assassination. The answer will shock you, because these aren't hedge funds or rogue traders. These are the entities that control the entire global financial system. So stay with me, because what you're about to learn will change how you see every market move for the rest of your life. Let's start by destroying the lies they're telling you right now. Right now, if you turn on CNBC, if you scroll through Bloomberg, if you check any mainstream financial outlet, they're feeding you the same 3 convenient explanations. Let me show you why every single one is complete bullshit. Lie number 1. It was profit-taking after such a strong rally. Pure fiction. Listen carefully. Profit-taking is gradual. It happens over days, even weeks. Investors slowly scale out of winning positions. They take some gains here, some gains there. What we witnessed Friday wasn't gradual. It was a vertical cliff, from $121 to $75 in 6 hours. That's not selling. That's arson. That's someone pouring gasoline on the entire market and lighting a match. Profit taking doesn't obliterate $46 per ounce in 360 minutes. Coordinated attacks do. Lie number 2. A large whale investor dumped a massive position. Completely fabricated. Here's why this makes zero sense. Even the largest whale in the world, let's say someone holding billions in silver, they don't dump everything at once. Why? Because it's financial suicide. If you try to sell that much volume instantaneously, you crash the price and destroy your own profit. Every smart whale scales out gradually to maximize their exit price. This wasn't one whale acting alone. This was a coordinated wolfpack attack. Multiple entities acting in perfect synchronization to create maximum carnage. Lie? Number 3. The algorithms went haywire. It was a technical glitch. Absolute nonsense. Let me explain something about algorithms. They don't go crazy. They don't have nervous breakdowns. They're machines. They execute commands programmed by human operators. This wasn't some rogue AI having an existential crisis. This was a pre-programmed, deliberately executed command given to high-frequency trading systems. Someone ordered this attack. Someone planned the timing. Someone profited from the destruction. And all this mainstream noise, these convenient cover stories, they exist for one reason: to keep you confused, to keep you from asking the real questions, to keep you from seeing what's actually happening. But here's the truth. They're desperately trying to hide. The weapon used in this assassination has a name, a very specific name. And once I show you how it works, you'll realize just how completely defenseless you are against it. The weapon is called Algorithmic Spoofing on Steroids. And I'm about to break down exactly how this digital execution machine operates. Let me show you the exact mechanism they use to murder the silver market. First, you need to understand the basics of how any market functions. Every market has two sides: buyers, people placing bids to purchase; sellers, people placing asks to sell. The price rises when buyers outnumber sellers. The price falls when sellers outnumber buyers. Simple: supply and demand. Economics 101. Now here's what happened. Friday morning at exactly 9:30 a.m. Eastern, they deployed high-frequency trading algorithms, the most sophisticated trading weapons on the planet, to execute what is called a spoofing attack. Let me break down how this works step by step, so you understand the precision of this execution. Step 1, the flood. Within milliseconds, we're talking thousandths of a second, the algorithms placed millions of fake sell orders across every silver exchange. COMEX, LBMA, every trading venue simultaneously. These orders represented hundreds of millions of ounces of silver, far more than exists in available physical inventory. But here's the critical part. These were not real sell orders. These were spoof orders, ghost orders designed purely to create an illusion. They appeared on order books just long enough to terrify the market, then vanished before anyone could execute against them. Step 2. The trigger, other algorithmic trading systems, the ones run by banks, hedge funds, institutional traders, they're programmed to react to major order flow. When they detected this massive wall of sell pressure, their automated risk management systems interpreted it as catastrophic news. And something terrible must have happened. Someone knows something we don't. Get out now. And their algorithms started executing panic sell programs. Step 3, the cascade. This institutional selling triggered the next domino: retail stop-loss orders. Thousands of ordinary traders had placed stop losses at key price levels $115, $110, $100. As silver crashed through each level, these stops got hit automatically. The exchange system started liquidating positions whether traders wanted to sell or not. Step 4, the liquidations. And that forced selling triggered the final domino: margin liquidations. Anyone trading silver with 5x, 10x, 20x leverage got instantly wiped out as their accounts went negative, and the exchanges automatically closed their positions to limit losses. Step 5, the vanishing act. And here's the most insidious part. Remember those original spoofed orders? The millions of fake sell orders that started this whole cascade? They disappeared, canceled in milliseconds, gone without a trace. The weapon had done its job. The execution was complete. Step 6, the result. A 37% crash in 6 hours. Billions transferred from retail traders to whoever was positioned on the other side of those trades. This is the digital guillotine. It's a precision execution system designed to behead markets with surgical accuracy. One clean cut, maximum devastation. And the most terrifying part? It's completely legal if you're powerful enough, because the people who deployed this weapon won't face prosecution. They won't see consequences. They are the system. But now you're probably asking the most important question: why? Why would anyone launch such a brazen public execution on the silver market? The answer isn't about profit. This assassination served a much darker purpose. It was about sending a message, a warning to specific nations who dared to challenge the existing power structure. And I'm about to show you exactly who that message was meant for. Let me show you the geopolitical chess game playing out behind this assassination. Over the past 6 months, something unprecedented has been happening in global finance, something that threatens the very foundation of Western economic dominance. The BRICS nations are building an alternative to the US dollar system. Brazil, Russia, India, China, South Africa, plus 34 new member nations that joined in 2025. And at the heart of their new system, gold and silver. Here's their 3-phase strategy to kill the dollar. Phase 1, conduct bilateral trade in local currencies, completely bypassing the dollar. China and Russia are already doing this. They settled $260 billion in trade last year using yuan and rubles, not $1 involved. Phase 2, price strategic commodities, oil, natural gas, rare earth metals, in terms of gold and silver weight, not dollars. Saudi Arabia is actively negotiating to accept gold-backed yuan for oil sales. This destroys the petrodollar system that's kept America powerful for 50 years. Phase 3. Launch a BRICS currency fully backed by physical gold and silver reserves. This creates the first genuine competitor to dollar dominance in 80 years. Now, why does this terrify the Western financial establishment? Because if oil starts being priced in gold grams instead of US dollars, the entire petrodollar system collapses. If nations can trade in yuan, rupees, or gold-backed BRICS currency, they don't need dollars anymore. And if they don't need dollars, the US can't print trillions to fund its deficit. The Federal Reserve loses its power. The Treasury can't run $2 trillion annual deficits. The entire empire built on dollar hegemony crumbles. So what did the guardians of the dollar system do? They fired a warning shot heard around the world. This 37% silver crash was a public demonstration of power, a message delivered to every BRICS nation. You think you can build a new system backed by precious metals? You think you can challenge our control? Watch this. We can destroy the price of your real assets whenever we want, wherever we want. We control the paper markets. We control the pricing mechanism. We set the value. Don't mess with us. This wasn't about making money on the trade. This was psychological warfare. This was showing every nation on earth that even if you accumulate physical gold and silver, even if you think you're protected from dollar collapse, the Western financial system can crash the price and make your reserves look worthless on paper. It's intimidation. It's control. It's the old guard fighting desperately to maintain their grip on global power. And they just revealed their hand by showing they're willing to destroy markets to protect their system. Now, here's where it gets even darker. Because this kind of coordinated institutional attack doesn't happen without direct support from the highest levels of power. This wasn't executed by hedge funds. This wasn't orchestrated by rogue traders. This came from the institutions that run the global monetary system. And I'm about to name them. On the record, who ordered the hit? Who has the power, the technology, and the motive to execute a 37% assassination of the silver market? There are 2 primary suspects, and they work together. Suspect number 1, the Bank for International Settlements, BIS. You've probably never heard of the BIS. That's intentional. The BIS is the central bank of central banks. It's based in Basel, Switzerland, and it's where the world's most powerful central bankers meet to coordinate global monetary policy. Here's what makes the BIS terrifying. 1. Sovereign immunity. The BIS operates under international treaty law. No national government can prosecute it. No court can subpoena it. It's literally above the law. 2. Complete secrecy. BIS meetings are closed to the public. No minutes are published. No journalists allowed. What happens in Basel stays in Basel. 3. Direct market access. The BIS has trading desks that can directly intervene in currency markets, gold markets, and precious metals markets under the guise of liquidity provision. The BIS's stated mission is to maintain monetary and financial stability. Translation, protect the dollar system at all costs. When BRICS nations started talking about gold-backed currencies, the BIS saw an existential threat, and they have the technical capability to coordinate high-frequency trading attacks across multiple exchanges simultaneously. Suspect on number 2. The U.S. Treasury's Exchange Stabilization Fund, ESF. The ESF is America's most secretive financial weapon. Created in 1934, the ESF is a multi-trillion-dollar fund controlled directly by the U.S. Treasury Secretary. It operates with 0 congressional oversight, 0 public accountability. The ESF's legal mandate is to stabilize exchange rates and counter disorderly markets. But here's what that really means. The ESF can intervene in any market it deems a threat to dollar stability. Currency markets, bond markets, commodity markets, gold and silver markets. It can do this in complete secrecy. It doesn't have to disclose its positions. It doesn't have to publish reports. It operates in the shadows. And it has unlimited firepower because it can draw on the U.S. Treasury's credit line with the Federal Reserve. The ESF has been documented intervening in gold markets during previous crises. 1960s, the London Gold Pool coordinated selling to suppress gold prices during the Vietnam War. 1990s, suspected intervention during the Asian financial crisis. 2008, rumored stabilization operations during the financial crisis. Now, here's how these two suspects work together. The BIS provides the strategy. They coordinate with other central banks. They identify the target. They plan the timing. The ESF provides the execution. They deploy the high-frequency trading algorithms. They place the spoof orders. They trigger the cascade. Together, they form an unholy alliance with one mission: protect dollar supremacy by any means necessary. And this morning, they pulled the trigger on silver. But here's the twist that changes everything. Because while retail investors were panicking and selling into the crash, these same institutions were doing something else entirely. They were buying. And that tells you everything you need to know about what happens next. I know what you're thinking. If they just crashed the price, why would they buy now? Because this was the plan all along. Let me explain the brilliance of this assassination. Step 1. Crash the price violently to create maximum fear. Step 2. Scare retail investors into panic selling at the bottom. Step 3. Accumulate massive quantities of physical silver at artificially cheap prices while everyone else is running for the exits. Step 4. Allow the price to recover, now holding far more silver than before. This crash accomplished two critical objectives. Objective 1, they scared you. They terrorized retail investors out of the market, transferring your silver to institutional buyers at bargain prices. Objective 2, they made it cheap for themselves. The entities that control the paper price used that control to create a buying opportunity for physical accumulation. Think about it. If you're the BIS or the ESF, and you know the long-term trend is toward de-dollarization and gold, dark silver-backed currencies, what do? You accumulate physical metal while you still can. You use your control over paper markets to crash the price, scare out weak hands, then back up the truck and load up on physical at discount prices. This is the most cynical, manipulative strategy imaginable. And it's playing out right now. So here's your survival plan, your 3-step counter strategy to avoid being a victim. Step 1. Ignore the screen price. The paper price is fake. It's manipulated. It's a psychological weapon designed to control your emotions. Stop watching the charts obsessively. Stop refreshing your portfolio. The number on your screen has zero correlation to the true value of physical silver. Focus on fundamentals. Industrial demand is exploding. Supply deficits are structural. De-dollarization is accelerating. None of that changed today. Only the fake paper price changed. Step 2. Buy physical, not paper. This crash proved once and for all that paper silver is a trap. SLV shares, COMEX futures, unallocated accounts, all of them can be manipulated, frozen, or confiscated during a crisis. Only physical metal in your possession is real. Coins you can hold, bars you can stack, metal stored outside the banking system. If the institutions that control the system are accumulating physical during this crash, so should you. Step 3. Think in ounces, not dollars. This is the most important mindset shift. Stop measuring your wealth in dollar terms. Start measuring it in ounces. Don't say, I want to invest $10,000 in silver. Say, I want to accumulate 100 ounces of silver. When you think in ounces, price manipulation becomes irrelevant. A crash just means you can acquire more ounces with the same amount of currency. Your goal is to stack ounces, period. The dollar price is just noise. Ounces are reality. And every ounce you acquire during this manipulated crash is an ounce they can't use to back their own system when the dollar finally collapses. Now let me tie this all together with the final verdict. So in the end, yes, this was an assassination. A brutal, coordinated execution designed to intimidate nations challenging the dollar and shake out retail investors who don't understand the game. But here's the truth they don't want you to realize. Every assassination creates a power vacuum. Every violent suppression of price creates a massive buying opportunity for those who understand what's really happening. They tried to scare you. They tried to steal your silver at cheap prices through psychological terror. The question is, will you let them win? Because this crash is actually the biggest bullish signal in silver's history. Think about it. The fact that the most powerful financial institutions on Earth felt threatened enough to execute such a brazen public attack tells you everything. They're terrified of losing control. They're desperate to maintain the illusion of dollar supremacy. They're fighting a losing battle against de-dollarization. And desperate entities make desperate moves. This assassination proves that silver matters. It proves that physical metal is a genuine threat to their system. It proves they'll do anything to suppress its price. which means you should be doing everything to accumulate it. So here's my question for you. Was this an assassination or just a market crash? Drop your verdict in the comments. Assassination or crash? And tell me, are you buying this dip or running scared? If you want to know which market the BIS and ESF will target next, because this won't be the last attack, subscribe to this channel. Our next investigation will reveal the 3 other commodities on their hit list and how to position yourself before they pull the trigger. Share this video with anyone who's panicking about today's crash. They need to understand what really happened. They need to see the crime scene evidence, because this wasn't just a market event. This was a declaration of war in the battle for the future of money. They fired their shot. Now it's our turn to act. The investigation is complete. The verdict is clear. Guilty, all charges.